Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of New York and London sugar markets. Ice raw sugar in New York. The key feature here continues to be the late April to late August descending wedge pattern, currently 22.24 to right off the bottom of my daily chart, which is highlighted in dark blue on my daily chart. This morphed from original sideways triangle into a descending wedge pattern, and back in late August the market broke out over the upper trend line. However, the move up soon got caught within congestion from early May, late April, and from the March 2012 high at 26.20. This halted the rise, but prices have not turned back down again. Indeed, the recent late September Golden Cross has seen the short medium moving average, currently 25.86, act as a support as recently as 3 weeks ago. Prices now appear to be caught between the March 2012 high at 26.20 and the high of last April at 27.42. Below the short medium moving average, you have the slowly rising medium moving average, currently at 25.16. And the core of the recent support from the break higher, consisting of the 38.2% absolute Fibonacci line at 24.88, the July 2012 high at 2400, and the nearby recent 50% Fibonacci line at 23.88. So where does that leave us now? Well, the confirmed break above and out of the descending wedge pattern gave us a primary target in the 27.25 area and a secondary target X1 in the 28.75 area. The primary target was reached in mid-September, but so far the market has shown limited interest in trying up to the secondary target X1 at 28.75. Admittedly, we did try higher last week, but that ended with two indecisive spinning tops on Wednesday and Thursday, and a bearish opening Black Mirror Bozo on Friday. Today, well, the market has dipped below the February 2012 high at 26.78, but has seemingly not liked it down there either, and we're currently back above it again. But still looking, if anything, a little bit indecisive, potentially bullish, but more indecisive than anything else. To be honest, there still doesn't seem to be that much topside resistance I can see, bar the October 2011 base congestion at 28.36. However, one should not underestimate the lack of desire this market seems to have in trying upwards. And this is despite the recent Golden Cross. To give you an idea of this, last week I drew a late August to early October bullish Andrews pitchfork, which fitted, and which I promptly retired for two reasons. The first was how I was not happy with the amount of activity within the pitchfork, and secondly, the action since late August to date may be trying to form a possible wide-ranging double top. As it is still too early on this double top idea as well. Ice Europe white sugar in London. The break higher over the upper trend line, currently at 690.20 back in late August of the late May, late August expanding wedge pattern, set the stage for the next move higher. This was a multi-pattern move, as the upper trend line was also the neckline for the late May to late August reverse head and shoulders pattern. Thus, a primary target for the expanding wedge pattern was at 769, with a secondary hard to reach target up target X1 up at 797.30. Meanwhile, the primary target for the reverse head and shoulders pattern, the one I had previously referred to as an out-of-place pattern, was in the 754.20 area, with a secondary hard to reach target X3 up at 684.90 area. As you can see from the daily chart, the primary targets for the descending wedge pattern and the reverse head and shoulders pattern at 754.20 were both reached in September, leaving the secondary targets still live. However, there's a question mark over these secondary targets, as after reaching the primary targets, the market changed and dropped away. Now, the decline has been halted by a combination of the rising short medium moving average, currently at 716.30, the slowly rising medium moving average, currently 698.10, and the original broken trend line, currently 690.20, and the congestion between 675 to 700 dating from July to August, and again earlier from June. This has seemingly been enough to turn prices back up, but prices still seem reluctant to surmount the April high at 730.5 and the October 2011 high at 735. Yes, I know, last week we saw that happen with multiple closes over both, but Friday saw a pullback down, probably started by some longs profit taking ahead of the weekend, and today is lower still, with a dip below last week's range, though I do note that the market has had a reactionary pullback up after approaching the rising short medium moving average below, which is currently at 716.30. Now, last week I noted how we still had open a changing gap above between 738.10 to 748. This gap had been earlier partially filled in. Well, last week the whole gap was filled in before the market turned back down. So I'm now wondering if we have a build-up of ammunition now before another attempt higher or not. We do, after all, still have targets open on the top side. Sugar white premium spread. We're in the last quarter of 2023, and this chart continues to be one of the busiest and most colorful of all my daily or weekly charts. Many things are still going on, all at the same time. Okay, so I'd previously spoken about two big picture items seen here on this weekly chart. We have the recurring big old bullish Andrews picture from 2019 to 2021, highlighted in dark blue on my weekly chart, with the market at the moment in between the lower time below, currently at 115.5, and the middle time above, currently at 189.75. I've said this so many times before, and I'll repeat it again. This pitchfork, despite being breached in the past, still continues to show the overall major bullish angle of attack of this market. Next, we have an ascending expanding wedge pattern highlighted in bright red trend lines and above the current market. This was formed between mid-April to late November last year, and currently it's 209.5 to right off the top of my weekly chart. To me it was, and still is, not the best looking of such wedge patterns, but it is also still out there, despite being tested as recently as mid-April this year, and it comes with all the possibilities such a pattern invokes. Then there's the most recent activity, and this has been around and through on occasion all the moving averages, notably the long moving average, currently 130 even, and the medium moving average, currently 140.75, prompted by the change gap moving lower of a few weeks ago. We have seen this activity push prices down through the 250% Fibonacci lines at 128.75 and 131.5, as well as the June 2020 high at 134 even, and then move back up through some, if not all of them, as well, though we are currently sitting just underneath the June 2020 high at 134.25. Many weeks ago I drew a bullish shift pitchfork for the August 2021 to February 2023 action, and I have once again decided not to highlight it, as with so many trend lines, the action neither adds nor subtracts from the current picture. Now, the next point is a big picture item, and it's a look at the whole of 2022 to date action as a possible huge lopsided diamond top, out of which prices have emerged a few weeks ago. This is the pattern that is highlighted in green on my daily chart. We initially had a false break higher from this pattern, then recently a false break lower, and so far the market, well, it's not decided as to which way this pattern will drive prices. I'm beginning to have doubts about the whole idea right now. The final point I'd like to highlight is a monthly one, and one that has repeated itself, though only the once. We have had a monthly key reversal down this past September, though not as wide-ranging as the monthly key reversal down we saw in September 2022. Yet it's worth bearing this in mind as we go forward.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.